match. Absorption costing income statement matches better, specifically because it matches fixed overhead. Okay. So anyway, you all are bored, so let's move on. You don't like talking about dresser drawers and guitars? No. Okay. What else do we have for me? Well, if we look at the next page, when will net income be the same for both approaches? When will net income be different? You all ready to take some notes? You ready? Excited? Ready, but not excited. Okay. I can live with that. I can live with that. Although I cannot understand why you don't think accounting is exciting. I just don't get it. Now you're thinking, are you an accounting major? No. Thank heavens, he says. So this is the last class, accounting class you ever have to take? It looks like it. He sounds really sad, doesn't he? So when will they be the same? They're going to be the same when sales equals production. So when will net income be the same, or operating income, either or? When will operating income be the same for both methods, or for both formats, for both income statement formats? When production equals sales, or when sales equals production. You got that written down?
Yes, I did.
Awesome. Evan?
Yes.
Okay. Absorption, operating income will be higher when production greater than sales. Variable operating income will be higher when sales greater than production. And so this you must know. Okay? This you must know. That would be good to have on your cheat sheet for the next exam. Just a hint. Hint, hint, nudge, nudge. A word to the wise is sufficient. And then I'm going to give you a wee bit of a formula here. So that's a wee bit of a formula that explains the difference, okay? So hopefully you can read it. What's the triangle in front of inventory stand for? Change. It's a mathematical symbol, delta, for anybody in a social or fraternity or sorority that has the word delta in it. Are you? No. Delta in it? And so change in inventory, and in this case specifically it's units of finished goods, times fixed overhead per unit equals difference in operating income. Okay? So far so good. Piece of cake, walk in the park. Easy as falling off a log. Questions, comments, concerns, random thoughts? So far, so good? No questions? Easy as falling off a log? Oh. So, I do believe on the next page it says something about a conceptual discussion, so we'll keep this short. Who here would like to be successful? So imagine you are successful. And imagine, close your eyes if you have to, imagine that you're a manager of a division of a Fortune 500 company. Okay, you there? Okay. And now I worked at above the division level for a period of time in my life, and we had budgeted bonus pool of $11 million for the year. and there weren't 11, I think there were 9 managers in the division. Or 9 managers, there were 9 divisions in this area. So there was $11 million and 9 divisions. So I think you can do the math. What was the average bonus being paid to do? Yeah, more than $1 million. You know, that's enough to buy a house in Warrensburg. That's enough to buy several houses in Warrensburg. You could become a slumlord, buy a bunch of rental properties. So, but the deal is this. You only get paid your bonus if you meet your budgeted profit target for the year, right? There's always a catch. It's just not given away just because. You got to meet your budgeted profit target for the year. And so, you know, right about now, I mean, you roll up close to Thanksgiving and, you know, you're talking to your accountant. You have a conversation with your accountant asking, so how are we going to do this year? You know, I've got a new house in Warrensburg I want to buy. And your accountant says, you know, it's going to be close, but I don't think we're going to make it. Now, suppose, and I'm not suggesting you behave this way, but suppose you were feeling a little underhanded and you really wanted that money. Would you be motivated to be a little underhanded? Unfortunately, yes. If there's $1 million on the table, people will do lots of unkind things for $1 million. Which is why you kind of have to set your ethical compass before you start encountering those types of monies. Because if you haven't by then, you're kind of sunk. So how can you, if you just wanted to be just a little crafty, a little sneaky, and way unethical at the same time, what could you do to make sure you earned your money? We're after high budgeted, we're after high profit, What do you do? What's the most simple way to calculate profit?
Would you earn minus your expenses?
I'm sorry?
Would you earn minus your expenses? Would you minus expenses?
Minus expenses? You mean make them disappear? Poof?
Less expensive.
Less expenses. But what journal entry would you write? Is that what you said?
Yes, that's what I said.
But what journal entry would you write? I mean, you just can't subtract. You just get, but let's get this on the table because it's a good review. What is the most simple calculation of income? Sir? Revenues minus expenses. So we've got to do something with one of those two numbers, expenses being one of them. And you don't have to look at me like that.
I'm not looking at you because when I look at you, you make me angry.
I'm sorry.
All right.
Okay. So, but what journal entry do you write? Don't look at you? Okay, you said the same answer.
Well, you're giving her a hard time about saying the word minus. It's really different in all things.
What?
Nothing.
Well, can you do that?
You want a journal entry.
Or an idea, or how you do it. How can we make our expenses less? I mean, ultimately, we want to do two things, one of two things, right? Isn't that right, Evan?
Yeah.
What two things do we want to do? We want to make which?
We want to increase revenue, decrease expenses.
Precisely correct. Of which decreasing expenses is one of them. But how do you do